What if I told you there are 7 stocks right now, flying under the radar, that are secretly igniting a massive buying interest among savvy investors? While the mainstream focuses on obvious plays, Wall Street insiders and smart money are quietly piling into these hidden gems, driven by breakthrough tech, strategic pivots, and upcoming catalysts. This isn't just about growth. It's about identifying companies poised for explosive moves before the crowd catches on. Get ready, because I'm about to uncover opportunities that could redefine your portfolio. First up, at number 7, we have Hims & Hers Health Inc., ticker HIMS. This personalized telehealth platform has been catching serious investor attention, rallying over 5% recently as the market cheered significant leadership changes aimed at fueling global expansion. CEO Andrew Dudum announced Mike Chi as the new COO, a move designed to supercharge operations, product, and marketing. HIMS is in a dynamic period, pushing beyond its initial offerings. The company is set to report its Q3 2025 financials this November 3rd, an event that could trigger volatility and provide crucial updates on user growth. A major catalyst is their new women's health specialty, focusing on menopause and perimenopause, projected to drive the Hers segment past $1 billion in annual revenue by 2026. That's a massive diversification play. They're also expanding men's health with personalized low testosterone treatments and an exclusive oral treatment slated for 2026. But a recent sequential decline in average revenue per subscriber, partly due to offboarding some GLP-1 users after FDA policy changes, led to a 15.8% stock drop on October 17th. This regulatory headwind introduces risk, and while analyst sentiment is mixed, some see significant upside from new specialties and international growth, targeting $6.5 billion in revenue by 2030. Next, at number 6, we have IREN Limited, ticker IREN. This vertically integrated data center operator has been on an absolute tear, hitting new all-time highs for 3 consecutive days. What's fueling this rally? Massive new cloud supply deals and tantalizing hints of more to come, all while running on 100% renewable energy. IREN recently deployed 11,000 NVIDIA Blackwell GPUs to existing AI partners, with another 12,000 on track for early next year, projected to generate over $500 million in annualized recurring revenue from AI alone. That's a staggering pivot. IREN just closed a $1 billion convertible notes offering, oversubscribed and showing incredible investor confidence. This capital is turbocharging their AI cloud capacity, with an aggressive expansion to 23,000 GPUs. Their 50-megawatt liquid-cooled AI data center, Horizon 1, is set for completion by Q4 2025. This strategic move into high-performance computing isn't just adding capacity, it's positioning IREN as a critical infrastructure partner in the digital economy. The company's Q3 FY25 adjusted EBITDA hit a record $83.3 million, and its stock is up over 460% year-to-date. But watch out, the CEO recently sold 1 million shares, a common but notable insider move. Can IREN's AI ambitions continue to outshine its Bitcoin mining roots and deliver explosive growth? At number 5, we have a newly listed powerhouse making waves in AI infrastructure, Fermi Inc., ticker FRMI. This stock just snapped a 3-day losing streak, jumping nearly 7% as investors saw a bargain opportunity driven by the insatiable demand for AI. Fermi recently IPO'd at $21, raising $682 million, and has already climbed 34% from its initial price. What makes Fermi so compelling? It's pioneering next-generation electric grids designed to deliver gigawatt-scale, highly redundant power, essential for the future of AI. Fermi's flagship, Project Matador, is an ambitious 5,236-acre campus in Amarillo, Texas, slated to deliver up to 11 gigawatts of low-carbon, on-demand power. This hypergrid infrastructure plans to integrate nuclear, natural gas, solar, and battery storage. However, Fermi is currently a pre-revenue entity with no operational history, making it a highly speculative investment. Some analysts call its $16 billion post-IPO valuation grossly overpriced, given the conceptual stage of its assets and the estimated $70 to $90 billion needed for full build-out. Only about 1.1 gigawatts is expected online by late 2026, with full development not until 2038. Yet, a letter of intent with Siemens Energy and a nuclear collaboration signal tangible progress. Fermi is set to report its first post-IPO earnings on November 3rd. Coming in at number 4, we have James Hardie Industries plc, ticker JHX. This stock surged over 8% after hinting at a potential 35% growth in net sales for Q2 fiscal year 2026. Preliminary results indicate net sales hitting $1.29 billion to $1.3 billion, comfortably beating consensus estimates. This isn't just a slight beat, it's a strong signal for the siding and trim segment, with adjusted EBITDA also looking robust, projected to be up significantly year over year. This positive pre-announcement is a crucial turnaround after a disappointing Q1 FY26, where the stock plunged 34% due to missed EPS estimates and a significant drop in North America sales volumes. That earlier dip even triggered an investigation into potential misleading sales practices. Despite that setback, analyst sentiment remains largely optimistic, with an average strong buy rating and a consensus price target implying over 28% upside. Truist Securities already raised its target post-Q2 news. James Hardie is strategically focused on long-term growth, targeting double-digit revenue expansion and tripling North America EBITDA. They're investing in capacity, have completed a $300 million share repurchase, and have secured key agreements like an exclusive deal with Beazer Homes. With official Q2 FY26 earnings due on November 18th, could James Hardie be a robust recovery play with significant upside in a critical industry? Our third stock on the hot list is Tilray Brands Inc., ticker TLRY. This global diversified player in cannabis, beverages, and wellness saw its share price jump over 8% as investors repositioned their portfolios ahead of an expected decision from President Trump on cannabis legalization. Tilray isn't just waiting for federal changes, they're building a formidable global empire. For fiscal year 2024, they reported record net revenue up 26% to $788.9 million, and adjusted EBITDA soaring 52% to $60.5 million. They're the largest legal cannabis company by revenue in Canada, a leading medical provider in Europe, and now the fifth largest craft brewer in the US after key acquisitions. Tilray is strategically tapping into the US hemp-derived THC market, diversifying revenue and mitigating regulatory risks. The potential reclassification of marijuana could unlock massive benefits, including the removal of punitive 280E tax penalties and improved banking access. Tilray is even raising $250 million through an equity program for strategic acquisitions to capitalize on these anticipated shifts. While analyst sentiment is mixed, Tilray's global footprint and strategic positioning could make it a major winner if federal reform arrives. Is Tilray ready to light up investor portfolios? Coming in at number 2, we have TMC the Metals Company Inc., ticker TMC. This company just extended its winning streak to 5 consecutive days, hitting a fresh record high. Optimism, a surging critical mining industry buoyed by major investment deals from the U.S. government into domestic production of vital minerals. With the U.S. actively acquiring stakes in companies like Lithium Americas and MP Materials, the spotlight is now firmly on companies like TMC, which produces nickel, cobalt, and copper, all crucial for the renewable energy and electric vehicle industries. TMC is at the forefront of deep-sea critical mineral extraction, a sector gaining intense investor interest. While currently pre-revenue and relying on external financing, the company received a substantial $85.2 million investment from Korea Zinc and saw a pivotal move with President Trump's April 2025 executive order, designed to accelerate seabed mining through expedited permitting. This substantially de-risks the regulatory landscape. Project economics look promising, with landmark studies revealing a combined net present value of $23.6 billion across its key areas. TMC targets first production by Q4 2027, with steady-state operations by 2031, projecting annual revenues of $1 to $1.5 billion. Its stock has delivered an astounding 762% total return over the last year, outperforming the S&P 500 by a mile. But remember, high reward often comes with high volatility. And finally, our number 1, BTQ Technologies Corp., ticker BTQQF, which now trades as BTQ on the NASDAQ Global Market. This quantum technology leader soared to a new all-time high, jumping over 51% after welcoming two key executives to accelerate its post-quantum commercialization efforts. Sean Hackett and Zach Belatesh, founders of Radical Semiconductor, are now full-time, boosting BTQ's drive to gain a foothold in the rapidly expanding quantum computing sector. Wall Street is taking notice, with investor Eric Jackson calling BTQ undervalued compared to competitors like Quantum Computing Inc., despite its roughly $2 billion market cap against QCI's $4 billion. BTQ's recent uplisting to NASDAQ is a game-changer, increasing visibility and access to capital. A major highlight is their Quantum Secure Stablecoin Network, or QSSN, recognized by the U.S. Post-Quantum Financial Innovation Forum and approved as a global standard. QSSN aims to secure the massive $280 billion stablecoin market against future quantum threats, with pilot launches targeting leading stablecoin protocols by Q4 2025. They've also demonstrated a quantum-safe Bitcoin using NIST standardized cryptography, protecting the over $2 trillion digital asset market. With groundbreaking research published and a Canadian $40 million capital raise, BTQ is a technological pioneer. The catch? Revenue remains negligible, primarily from related party licenses, and some analysts maintain a hold rating due to valuation. But with CEO Olivier Roussy-Newton recently increasing his ownership, insider confidence is high. Now, let's take a quick look at the numbers side by side. Starting with market capitalization, we see Irene Limited and Fermi Inc. are the largest among these, both commanding around a $15 to $16 billion market cap, showing strong investor confidence in their growth narratives. Hims and Hers and James Hardie are also significant players at $12 billion each. On the smaller side, Tilray and BTQ Technologies are both around $2 billion, while TMC, the metals company, sits at $3 billion, often indicating higher potential for percentage growth if catalysts hit. When it comes to revenue, there's a clear distinction. James Hardie is a powerhouse with $4 billion in revenue, reflecting its established position in building materials. Hims and Hers also has a substantial $1 billion, showcasing its strong market penetration. Irene Limited and BTQ Technologies show solid revenue figures at $496 million and $487 million respectively, signaling growing operational scale, especially for BTQ's early-stage quantum tech. Tilray brings in $821 million, diversifying its segments. Notably, Fermi Inc. and TMC, the metals company, currently report no revenue, underscoring their highly speculative, future-focused nature, where valuation is driven by projected potential rather than current sales. Gross margins tell an interesting story about profitability at the core. BTQ Technologies boasts an impressive 86.82% gross margin, highlighting the high value and intellectual property inherent in its quantum computing solutions. Hims and Hers isn't far behind with 67.11%, a strong indicator for its telehealth model. James Hardie and Irene Limited show respectable margins for their industries at 38.17% and 22.08% respectively. Tilray's 20.17% reflects its diverse yet competitive cannabis and beverage markets. And as expected for pre-revenue companies, Fermi Inc. and TMC, the metals company, show 0% gross margin. Finally, let's talk about earnings per share. Hims and Hers leads the pack with a positive EPS of $0.80, a strong sign of current profitability. Irene Limited also reports a solid $0.61, indicating its operational success, particularly in Bitcoin mining and emerging AI services. James Hardie shows a positive EPS of 77 cents, reinforcing its fundamental strength. However, we see negative EPS for Tilray at negative $2.27, TMC at negative $0.37, and BTQ Technologies at negative $0.04, typical for growth companies heavily reinvesting or still in early-stage development. Fermi Inc. has no reported EPS yet, as it's pre-revenue. These are 7 hot stocks that are sparking a serious buying craze across the market. So, which of these 7 hot stocks do you think has the most potential to deliver explosive returns in the coming year, and why? Drop your thoughts, insights, and predictions in the comments section below. And for even more opportunities that Wall Street isn't talking about, don't miss our video right here on 7 undervalued tech stocks that could explode in 2025. Click on this video here, and make sure to hit that like button. Subscribe to the channel for more expert insights.